risk-off mode clearly is back in the fray. Not just the fact that you've seen the US 10-year yield soar all the way back to that 4.3% mark, the fact that dollar as well has risen to a 3-month high. More importantly, it's been a knee-jerk reaction that we've seen to the March rate cut expectations, which clearly have now pushed back to July. That is what the bond markets in the US seem to be pricing in right now. So yes, irrespective of that green finish that we had yesterday, over 100-point gain, if we do choose to follow the global cues, so that's going to really reverse, because the global picture this morning is looking pretty weak, be it the handover, Nikunj, from the US equity markets, or for that matter, the way Asia is this morning.
Yeah, look, I mean, before we discuss local markets, it's about the global markets.
Yeah.
Now, whether it's a combination of pure, simple profit booking or concerns which are centered around where the inflation print is. Global markets were looking for a reason, and I think they've got a reason, which is that inflation print for 2024 is not looking all that encouraging, at least the first read. Now, that does not change the narrative. That does not change the trajectory. That does not change what really could be called as the general view on where liquidity is moving. But I guess global markets needed something what could be called as a news trigger, so that there could be a bout of profit booking, and I think we've seen a bout of profit booking. Now, in isolation, if you look at a 1% cut in Dow and a 2% cut in Nasdaq, it is not a very scary number. But in terms of the quantum and the percent,
the day's high point, and you had really a lot of resilience coming in from the oil and gas heavyweight Reliance Industries, which incidentally topped the 20 lakh crore market cap. So that was a support. It was the PSUs that also did a lot of heavy lifting, not to mention the Nifty Bank Index, which has been awfully lackluster off late. That saw quite a bounce back. But Nikunj, the trend that we've been seeing for the past many days is that underperformance in the broader market as compared to the frontliners.
Siavan, I'm not at all surprised with the selling in PSUs. I mean, that was long overdue, and it may have coincided with what is happening in the world. But frankly, if you look at the percentage shakeout in some of the PSU stocks, the shakeout I think is very severe, and that typically happens when there are excesses in the market. Nothing goes up in a straight line, and I think that is what has happened with some of the PSU stocks and some of the so-called weak, some of the trader-dominated stocks. So nothing in terms of news flow had changed between October and December, which warranted that kind of a rise. Similarly, nothing has changed post-budget, which will warrant this kind of a sell-off. I think in terms of the approach for PSUs, in my book, should be the following. PSUs will be the outperformers. But within PSUs, just because there is a tag PSU attached to it, I don't think you should be buying them. Let's break PSUs into 3 categories. First, banks, which look cheap and which look they're on the right side of the credit curve, they're on the right side of the cycle. Then you've got oil, ONGC, or Oil India, or oil marketing companies. They still have a lot of value left. Given names, when it comes to the real small tiny tunes in the market, I think that's a place you really need to be careful of. So in this decline, you need to go back to PSUs, but you have to go back to large PSUs. I like banks. I think there is a reason that you should be bullish on oil PSUs, and you may stay bullish on some of the power PSUs. But barring that, I think just because it is PSU, it does not make it a buy.
Yeah, absolutely.